Excuse me. How much is this book?
For you, free. Take it.
Ah, if everything was as easy as that. Unfortunately, back here in the real world, we know that there are a couple of inevitable things in life, that being death and taxes. And unfortunately, investment charges and costs fall into that second category. Whether you're looking to buy individual shares of your favourite coffee company or shares in a global index fund for your pension, you're going to find different kinds of funds from your favourite platforms around the world, like these guys and many more. Some of these costs are going to be one-off costs and others are going to be variable. Some will depend on how much you put in and some are going to be fixed. Some of them will also just be ongoing and constantly eating away at your investment month after month, year after year. And finally, some will depend whether you're buying UK shares from the US or US shares from the UK. The question I want to answer in today's video is what fees are, and go through all the different kinds of fees, and really ask the question of, do fees really matter? Do they actually matter in the long run? Let's have a look. Firstly, let's look at the different types of fees. There's a long list here. Firstly, commission. Whenever I think of commission, I think of that scene from The Wolf of Wall Street when Jordan Belfort walks into that penny stockbroker, sits down with the manager, and he tells him you can make 50% commission on those pink sheet 1 penny stocks.
I make 1%. I did make 1%.
Pink sheets, it's 50.
It's 50%?
Now that is pretty crazy. These days trading is a lot more different and most of this is all done now online on digital trading platforms, so those levels of commission are thankfully gone for you and me. However, they may exist and they do exist in some different places, so look out for these. Often what used to be called commission is really called dealing fees, and these are individual fees that you are going to face every time you buy a stock and share or potentially even a fund. They are one-off costs based on the cost of the transaction. Sometimes they might be based on the cost of the transaction overall, and other times they're going to be a flat cost. So for example, platforms like Hargreaves Lansdown and Fidelity will charge per share transaction at a fixed level of cost. With the cost being a fixed cost, it would be best advisable to try and put in as much money as possible to spread that fixed cost across a larger amount. Otherwise, you may end up paying a £10 dealing fee to that broker just for one individual share, which would put your cost quite high. But hey, that's just my advice as a non-professional advisor, so seek out professional help if you need it. In number 2, platform charges or account fees, whatever you want to call them. As hinted in the name, this really depends on the platform you're using. So every different platform out there will have a different set of account charges or dealing charges. So for example, some of the newer companies out there like Freetrade will charge no fees at all. They'll only charge you platform fees if you choose to opt into their premium service to give you access to a wider range of shares and open up a stocks and shares ISA. However, this isn't true for most platforms, and there will be an account-based management fee attributed to your account, and this will typically be based on the amount of money that you have in your account, and therefore that charge will be a variable charge. The account fees are probably some of the most important fees because they're going to hit you every single month, every single year, and add up over time, especially if you're a long-term investor. In number 3, FX fees. I never really understood this. You know, when you go to the airport and all of these exchange places say 0% commission, as if they're just giving you stuff away for free. Well, they might not be charging commission, but you can be damn well sure they're making a lot of money because they give you some bloody awful rates. They make their money in the differences of prices that they buy their foreign exchange from and sell their foreign exchange, and that really is what their commission is. They can call it 0% for all they like, but I think I know their game. Coming back to the different investment platforms, this is a bit of a wild west too. Some will charge based on the transaction, again, might not charge a commission fee specifically, but will have their own internal exchange rates. Other platforms like Stake, for example, if you want to buy some US shares from the UK, will charge a flat 0.5% exchange fee every time you buy, and the same every time you sell. There's a link in the description below for Stake if you're interested in trading US shares from the UK. Really cool platform that I've got installed on my phone. The next one is exit fees. Now, these are a lot less common, but still important, worth looking out for. This might be if you're moving your account from one brokerage to another. So just be careful here in case you get yourself locked in. Next up, everyone's favourite, stamp duty. Unfortunately, stamp duty doesn't just apply when you're buying houses here in the UK, it chases you around everywhere.
Why are you running? Why are you running?
So every time you buy a UK share, you will be paying stamp duty. Specifically, stamp duty reserve tax. You'll pay 0.5% for every single transaction you make. On a positive note, this only applies to individual shares and not different funds or investment trusts. So you can save a bit of money here if you're buying into low-cost index funds. I have a sneaky suspicion that stamp duty tax probably goes to refurbishing Buckingham Palace. But don't tell anyone. And finally, some of the more important fees here, management fees. These fees are ones that I'm referring to typically when investing in different kinds of funds or other products from the platforms that you like using. If you look very carefully at the funds you're investing in, there'll be fees to do with the management of that fee. That's on top of the platform fee or the account fee that you're going to be looking at. So add these two costs together and you'll get your overall management fee for your investment. Management fees are incredibly important because although they're typically very small numbers like 0.25%, 0.5% for example, they add up over the years and in 20 or 30 years can have a huge impact on your investment pot. Companies like Vanguard have built an entire business around reducing that cost and creating an environment where retail investors like you or me can have a very low cost way into the market. Give them a go if that's something you're interested in. I'm going to run through 3 really quick examples here. Number 1, buying a UK share. Number 2, buying a US share. And number 3, buying into an index fund. So we've looked at all the different kinds of fees and we're really confused at this point. Where the hell do we start? And do they really affect your investment? And how do they affect your investment? Well, the answer is they really can affect your investment, and especially over time, those management fees and account fees can have a significant effect. Think about it this way. If every single year you're losing 1% of your investment, which could have potentially grown and compounded for you, you end up losing a much bigger chunk of money. Vanguard have a really good example up on their website showing the small difference a 2% fee can make over your entire lifetime of your account. They say, imagine you have $100,000 invested. If the account earned 6% a year for the next 25 years and had no costs or fees, oh, I'd like to live in that kind of world, you'd end up with about $430,000. If, on the other hand, they say, you paid 2% a year in costs, after 25 years you'd only have about $260,000. So they're saying that the 2% fee paid every single year would wipe out nearly 40% of your final account value. Wow.
Wow, look at this.
So this just shows why fees are extremely important, especially for us long-term investors looking to invest in low-cost index funds. So there you have it. In conclusion, fees are everywhere. Just be careful. Nothing in life is free, unfortunately, and you're not going to be able to escape them by going down the investment route either. As a quick recap, remember there's going to be fees depending on whether you're buying individual shares or different kinds of funds, and whether you're buying in your native currency or whether you want to buy shares across the pond, in Europe or around the rest of the world. Someone's going to take your money somewhere. It's really important here that you do all of your own research. As I've said many times before, I'm not a financial advisor, so make sure you look through all of the key investor information documents on all of the different websites to understand exactly what you're getting yourself into. If you want my advice as a random person on the internet, it's a no-brainer to try and keep your fees as low as possible, especially if you're a long-term investor like myself looking to grow your wealth in the next 20, 30, even 40 years. If I live that long, definitely a bit of a no-brainer. Anyway, thanks again for sticking with me on this video. I hope you found the content useful. Give me a like if you have, subscribe for more, and I will see you guys in the next one.